European debt drama. We rally up the risk for U.S. banks. Lehman's legacy. The SEC closes the book on a key chapter in the financial crisis. And liquid assets inside the multi-billion-dollar juicing industry. Jared.
Live from Bloomberg headquarters in New York City, this is In Business.
Hello, everyone. Welcome to In Business. I am Trish Regan. We want to get right to the numbers here as we check these markets. You can see that the S&P is trading up just barely, and the Dow Jones Industrial Average is down about 9 points. Really, the markets here straddling the flat line as investors contemplate all their concerns right now coming out of Europe. Consumer sentiment did come in a little better than expected here in the U.S. at 79.3. A little bit of good news there, perhaps related to these lower gasoline prices. But again, the big concern being Europe. Will we see some stimulus out of Europe? We're going to be talking about it plenty within the next hour. But let's get a look right now at some of our top stories. Morgan Stanley has told its financial advisors that it will adjust prices on a few thousand trades in last week's IPO of Facebook. Some trade confirmations, they were delayed, and some orders may have been mishandled in Facebook's debut last week on the NASDAQ. And JP Morgan Chase handed the oversight of risk to 3 directors with no risk experience. One is the head of the Museum of Natural History in New York and a former member of AIG's governance committee. Another is the CEO of Honeywell, and the third is president of Henry Crown. The U.S. Treasury Department has declined to name China a currency manipulator, but in its semi-annual report to Congress, Treasury did say the yuan remains, quote, significantly undervalued, and it said it will closely monitor the pace of yuan appreciation. All right, let's get a trader's perspective right now on this morning's market action. For that, we're heading down to the NYSE, where Meridian Equity Partners Stephen Guilfoyle is standing by. Tim Mulholland of China Capital is over at the Merck for us. And we have at the NYMEX Jeff Grossman of BRG Brokerage. Welcome to all of you. Stephen, kicking it off with you. Are traders reluctant to be long heading into a long weekend right here in the U.S. when they know the markets in Europe are going to be open on Monday?
I would say certainly. I don't think too many traders are willing to go into this weekend with any position at all. It's something you have to be real careful about. It's going to be 3 days so you can trade freely on the liquid market again. And I think that, especially after 2 o'clock, after the bond market closes, you won't see much action at all.
Won't see much action at all. Okay, let's talk to Tim, who's following the bond market pretty closely. We did get some consumer sentiment news out today. What's your take on that? What's your take on what we're going to see in the bond market?
Well, there's still this flight to quality bid. And I noticed the periphery bonds yields rose, so there's still that risk-averse nature to the market. We have a holiday shortened session today, so I think they'll stay bid pretty much. And again, it's due to the uncertainty, and I do agree that traders are going to want to be flat coming into the weekend. No time to be a hero here.
Jeff, what do you attribute this increase in consumer sentiment to? Is this a result of these lower gasoline prices, lower commodity prices? I mean, because after all, the headwinds, in fact, have picked up, specifically out of Europe, but Americans don't seem to be feeling it in this latest read.
I would have to agree with you. It certainly would be something that is giving everyone a little reason to breathe easier. These lower gasoline prices are making everyone a little bit happier. We're probably going to have some narrowing range right here in the near term. The real key is going to be after the Memorial Day holiday, what you see in the inventory reports. We'll see how the driving season is shaking out, and that's going to really give us an idea what kind of consumption we're going to have. That will be the telling factor here to tell us direction in the gasoline and the crude oil market to go with it.
Stephen, why aren't we seeing more of a reaction, more of a positive reaction to the hope for more stimulus coming out of Europe, the stimulus that's expected to come out of China, and even the rumors and the talk of QE3 here in the U.S.?
Well, there certainly is a lot of talk of stimulus out of the BOE, out of China, out of the ECB, and I think a lot of it will come to fruition. Here, I think we're jumping the gun a little here. I don't think you're going to see it from the Federal Reserve, not anytime real soon anyway.
What about this fall? I mean, as we head into the election season, do you think they'll be reluctant, the Fed that is, to print more money, or do you think they might do it because you want to get some kind of boost?
Well, that's kind of the wild card. I don't think they can extend Operation Twist. That ends June 30th. They've already hit their targets, and they just don't have that much in inventory regarding short-term securities. Now, for QE3, if the numbers come in weak, there may be political pressure there, so it still is a wild card. So you can't place all your bets, let's say, in one basket. You have to be a little bit careful. You have to spread them out. and lean one way or the other depending on what you think.
Tim, when we look at the yields on 10-year treasuries, I mean, it's very clear that investors are seeking some safety. Do you anticipate that to continue as we move forward this summer?
Well, I think at least until mid-June, or until we get some resolution in one way or the other in Europe, you know, because when you take these negative real yields, you really are concerned about return of principal. But I don't think that's going to happen. And I do think if there's going to be some stimulus from the Fed, it's probably going to come from the mortgage end rather than Treasury end this time. But again, until mid-June, it looks like we're going to be in this risk-averse state.
So what do you mean specifically? What could you see them doing on the mortgage end?
Well, I mean, there's the talk, if there is a QE3, it'll probably come from the mortgage side. That's, you know, what the talk is. And if there was some sort of twist or some sort of other type of sterilized type manipulation, it'll probably come in the mortgage to keep mortgage rates down.
Okay, Jack,
I don't think Treasury rates will go that much lower.
Let's get a final check on commodities with you. Tell me where you see oil over the next week. I mean, certainly today's trading, but just over the next couple of weeks here as we deal with some of these hurdles coming out of Europe.
Well, the way I was saying just before, we're going to be pretty much range bound here for a while, probably between 89.5 and about 92.5. Again, the real key that's going to really tell us a direction will be the consumption, and gasoline is right now the leader and will be the leader and give us direction probably till the end of the summer. It always has been that way.
Okay. A little bit of a silver lining, though, at least for the U.S. economy and for the consumer. And as we said, we saw that reflected in the sentiment numbers this morning coming out of the University of Michigan. All right, we're going to have to leave it there. Thanks to the whole gang. We want to turn our attention right now to Europe. Sarah Eisen has been tracking all the headlines out of Europe. She joins us right now with the very latest on the Euro crisis.
And it's important to keep track of all the headlines, Trish, because we are in such a headline-driven market. Just look at what happens every time a European leader speaks, because the focus is now on the politics, as Europe tries to figure out this existential question. Are they going to end up in a fiscal union, in a transfer union where they share their debt or not? And all of this happening as the odds go up by the day of Greece having to leave the euro and the risks associated with that. SocGen equity strategist just putting out a research note saying, look, if you have a disorderly exit, the European stock market, Euro stocks, a big umbrella of Euro stocks, could be hit as much as 50%. If it's an orderly exit, they say 10%.
You know, it's interesting to think about this sort of moment in time, because in fact, if it becomes very disorderly, and if in fact we see on June 17th that the Greeks decide they want out of the Eurozone, might it be like that moment in time that we saw in 2008, September, Lehman Brothers, and then suddenly it forces all the politicians to get on the exact same page because they say we need to prevent this from happening again. Exactly what we saw here, because don't forget, it was Lehman and then the expectation was, well, maybe Morgan Stanley's next, maybe Goldman's next. It was this contagion fear that finally prompted lawmakers to say, all right, we need to do something.
Yeah, and you hear Lehman being evoked even by politicians in Europe that say it would be absolute catastrophe if Greece were to have to leave the euro. The problem here is that Lehman, it was a big shock. It was a surprise. This has been the longest running train wreck. Still, there are so many known unknowns about what would happen. Yesterday, we were talking about bank runs. Today, in the news, there's reports, including Bloomberg, confirming here that Catalonia, one of the biggest regions in Spain, is having problems financing its own debt. I mean, there are so many risks to keep track of here that when you talk about contagion in the banking system, it's really at a whole new level when it comes to Europe. And it's why the European politicians now, more than ever, as if they hadn't already 2.5 years into the crisis, need to figure out if they're going to sacrifice some of their sovereignty to really share the debt burden, as investors are demanding, because what they're doing so far isn't good enough. We're looking at Spanish yields today rising above 6.25%. Italian yields are on the rise. The euro hovering around a 2-year low. I mean, markets are moving.
What are we hearing and seeing from the Greek people themselves? Is there a large group that actually says, I want to stay in the Eurozone?
The majority of Greeks still say that they want to stay in the Eurozone. The problem is, according to the latest polls, the party that's gaining traction is the Syriza party. They're against the bailout. At least they want to renegotiate the international bailout from the EU.
But renegotiating is very different, obviously, than saying, okay,
they don't
we're
want
done.
to leave the euro. That party does not want to leave the euro. The problem is the Germans and some of the other leaders in Europe say that Greece can't renegotiate its bailout. This is what's been determined. And here you go again with this political back and forth.
It's like a game of chicken.
Exactly. We're going to say it at the same time.
Exactly.
And I have to bring this up, Trish.
Oh, let me
Bloomberg Business Week cover. It's on the
cover.
newsstand. It's an amazing cover, and it really captures what we're talking about right now. 2.5 years into the crisis, 18 summits later. The next one, by the way, on June 28th. Bang your head here for the real relief, because
otherwise you're not going to get it.
And it's been very difficult.
Sarah Eisen, thank you very much. We're going to be talking to you later in the show. Okay, that's the latest for you out of Europe. But just how will all these problems across the Atlantic filter their way through our own corporations back here at home? Dom Chu is here with a look at some of the U.S.-based companies that could be hit hard by a slowdown in Europe. Dom, fill us in.
Yeah, that's right, Trish, because some CEOs may want to bang their head somewhere right now if things in Europe really do get a lot worse. We're talking about some U.S. companies that get a lot of their revenues, their sales, from Europe. Now, we took a look because at Bloomberg, we love looking at the data, love looking at numbers. We said, okay, how many companies in the S&P 500 actually get a load of their sales, 50% or more of their sales from Europe? We had a lot of them come up here, but three I wanted to highlight in particular here because they're fairly well-known names. Harman International, they make car audio, electronic systems. Also, Borg Warner, another company that does auto parts, electronics, components, that kind of thing. Those two companies have heavy sales exposure to Europe, as does another company that maybe a lot of people don't know has a lot of exposure. Priceline.com, the online sales company, gets actually more than half of their revenues from Europe. So another company to watch out for there. Again, those that may have a lot of exposure if things really do go south in Europe. But chief U.S. equity strategist at Citigroup, Tobias Levkovich, says it's not just about what happens in Europe, because we all know it's a very global economy right now, right? Whatever happens in Europe could have, yes, an effect on U.S. markets here, but also on corporations in Asia as well, and Asia with the U.S. The reason why, even if U.S. companies, yes, get some of their sales from Europe, if Europe impacts Asia, do Asian manufacturers who use U.S. components get a little bit hit as well? That's the real concern. That's the reason why Tobias Levkovich says that even if you assume that direct sales from Europe for U.S. companies are about 10 to 11% for the S&P 500, that could go up by 30 or 40 percentage points if you look at the overall picture for around the world ripple effects. So we took a look at the heavy exposure to Asia as well. How many companies get more than 50% of their sales from the Asian area? Well, yeah, two chip makers, Texas Instruments and Intel. Tech heavy. A lot of tech companies get a lot of business from Asia. And then Wynn Resorts, the big casino operator, obviously a lot of operations, a lot of revenue coming from that greater China region. So Trish, when you look at it, it's not just about the European exposure for the U.S. You got to look all over the place for all those different ripple effects.
Yeah, Asia as well, but emerging markets in general may also see some more selling, Dom, as people decide to sell off some of their riskier assets and seek this flight to quality. Anyway, thank you so much, Dom Chu. We're asking, is the U.S. economy strong enough to withstand the shocks out of Europe? We're going to talk to a strategist who says yes and predicts the S&P, get a load of this, will be at 1450 by the end of the year. Plus, we're going to tell you what prosecutors were doing outside of Amazon's shareholder meeting yesterday, and we're going to be cracking the books on Amazon's business model, a model that has some on Wall Street puzzled. Find out why. All right, Europe continues to put pressure on U.S. equity markets. So as we head into summer, how are strategists positioning their portfolios? Well, joining us right now from St. Louis, Missouri is Scott Wren, senior equity strategist at Wells Fargo Advisors, who has a 1,400 to 1,450 target on the S&P by year end. Pleasure to see you, Scott.
Hi, Trish. How are you?
Very good. Okay, so what's going to get us to 1,450 by the end of the year?
Well, I think a few things have to happen. Of course, we'd love to see things calm down in Europe. I'm not so sure that's going to happen. But I think key here is that the U.S. recovery, I think, is going to continue to chug along at a 2.5% rate, something like that. But the work that we're doing suggests that confidence, business and consumer confidence, is going to continue to slowly improve. I think our labor environment is going to continue to slowly improve. And I think those things, along with this modest economic recovery that we have, are going to be enough to really push valuations up a little bit. You know, really at 14.50, that's a 13.5, 14 PE, still below the long-term average, and I think very realistic by the end of the year.
You know, but Scott, there are a lot of concerns. I mean, I'll give you consumer confidence. confidence. That's improving. We certainly saw it in the latest sentiment numbers out today out of Michigan, and that's in part related to these lower gasoline prices. But when you talk about an improving labor environment, how do we get there when we're facing a fiscal cliff, when we're facing severe issues in Europe, and CEOs, frankly, are a little reluctant to hire?
Well, CEOs and businesses in the U.S. have been very reluctant to hire because, you know, they don't know what their tax rates are going to be, what it's going to cost to hire somebody, what the regulatory environment's going to be. So the thing we've been seeing, though, Trish, is that we've seen a really broad swath of industries hiring. They just haven't been hiring that many people. And so I don't think you're going to see a big acceleration in hiring, at least between now and the end of this year. But I think you're going to see gradual improvement there. Now, as far as Europe goes, you know, my personal opinion is that, you know, at some point Greece is going to be out. There might be a couple of other people out of the common currency as well over the next few years. We're going to continually
forgive me, I got
to
to stop you there. You said over the next few years. I mean, some people are saying as early as this summer. We've got an election coming June 17th in Greece. You don't think it's going to happen then?
You know, I don't think it is going to happen then. And really, Trish, you know, there's been a lot of rumors running around the market that this weekend something could happen. But, you know, after the elections, I would say minimal. I give that a very low probability. I think it's going to play out longer than that. But, you know, part of it's going to be how orderly is that exit whenever it does happen. But we're going to keep revisiting this European debt situation for years to come. This is not going to be over anytime soon. And I think that the global economic recovery
away from that. I mean, I still.
Well, that's a tough thing.
I don't know how you get to 1450 if you're looking at a very different eurozone. I would have to imagine that sentiment pours over here.
If stocks were expensive and if people were not providing liquidity, China, the U.S., the ECB is going to do a lot more here, too. I mean, they're not going to sit on their hands either.
Okay.
So that's part of it as well. So we're going to see a lot more liquidity injected into the market. I don't think the emerging markets are going to slow down nearly as much as what some people think. I think we're almost at the bottom in terms of China. You know, Europe, you know, the question there is, are they going to have a mild recession or a more severe one? I think it's going to be, you know, not mild, but a little bit more than that. So they're going to have, obviously, a reasonable recession there that's going to last a while. You can't count on anything out of Europe. You can't count on anything out of Japan. You know, it's going to be the emerging markets. The U.S. is going to be pulling the cart. You know, they're going to be the lead sled dog. And I think, given the valuations, given the modest growth that we're looking for, that really 1450 is not out of the cards. Now, you know, if we wake up some morning and, you know, well, here's what you do, I think. We have our clients. We are overweight the consumer discretionary sector. We're overweight materials, which has gotten killed in this pullback. We're overweight technology. So what we've been trying to get our clients to do is position themselves for the second leg up in this cyclical bull market. We want them exposed to those sectors, those industry groups, and ultimately those stocks that are going to be able to take advantage of the continuation of this U.S. and global economic recovery, despite what's going on in Europe.
Live from Bloomberg headquarters in New York City, this is In Business.
Hello, everyone. I'm Trish Regan. We're 1 hour into trading. We want to get a check here on these markets. You can see the S&P, the Dow, and the NASDAQ all pretty much hovering there towards the flat line. Dow Jones Industrial Average perhaps seeing the worst of it, down about 0.2%. Actually, the same there over at the NASDAQ, which is off 6 points, and the S&P pretty much to the flat line. This is despite the good news about consumers feeling more confident about the economy. We got a read of 79.3 on the University of Michigan index, which, guess what, folks, is the best since October of 2007, and you have lower gasoline prices to thank for that one. Nonetheless, plenty of concerns out there still coming forward about Europe. A lot of people questioning whether or not they want to be long as they head into a holiday weekend in which the markets in Europe are going to be open on Monday, but we, of course, are going to be closed. Anyway, we want to get straight to our top stories, beginning with Morgan Stanley. Morgan Stanley has told its financial advisors that it will adjust prices on a few thousand trades in last week's IPO of Facebook. Some trade confirmations and orders were delayed and may have been mishandled in Facebook's debut last week on the NASDAQ. And the SEC has wrapped up its investigation of Lehman Brothers. The commission found no evidence of fraud at Lehman in the months before its collapse in 2008. This is according to an internal memo. Now, the SEC had been trying to determine if Lehman misrepresented its financial health before filing for bankruptcy. And Elon Musk's spaceship, known as SpaceX, has made contact with the International Space Station. The space station's robotic arm has grabbed the SpaceX as it begins the docking process. If the docking is successful, astronauts at the space station would open the hatch and unload test cargo of more than 1,000 pounds of food, clothing, and lab equipment. For a look at the individual stocks moving in this market right now, we want to head right down to the floor of the New York Stock Exchange. Josh Lipton standing by with a look at all of it. Hey, Josh.
Hey, Trish, how are you doing? Yeah, let me name just 3 stocks, put them on your radar, that are moving higher this morning. Let's begin with Quest, which is advancing here in morning trading. That's as Dell is in discussions to acquire Quest, which makes tools that help companies manage their computer systems. Dell, among several companies that made offers for Quest after it agreed in March to be bought by private equity and venture capital firm Insight Venture Partners for $2 billion. I also want to mention Groupon, which is enjoying a modest advance here. The company now testing a credit card reader for merchants that could buy with similar devices offered by eBay's PayPal. The reader designed for businesses that rely on Groupon to market their wares. And one final one I want to point out, Trish, is Chesapeake Energy. Now, we learned yesterday that billionaire investor Carl Icahn, known, of course, for pushing for change of companies in which he invests, has become one of Chesapeake's largest shareholders. His stake may amount to 4%, which would make him at least the 5th largest investor in the natural gas producer. Trish.
All righty, thank you so much. Josh Lipton in our Latin America report today. Officials in Costa Rica and in Mexico are on high alert right now as 2 separate volcanoes have become very active in recent days. Approximately 25 million people live within a 60-mile radius of this volcano that's active in Mexico. Now, so far, it has spewed gas and ash, but residents have not yet been told to evacuate. Now, as we head to break, let's take a quick look at how the major indices in the region are faring today. Let's see if we can get a quick check there on Mexico's Bolsa Index. You can see trading pretty much to the flat line. Similar story there in Sao Paulo, though trading up about 3/4%. Down in Santiago, in the Chilean stock market, you can see a gain of 0.2%, or about 8 points. Alrighty, as the West Coast wakes up, we like to take a look at some of the tech stocks that are making some news right here, and one of them happens to be Verifone Systems this morning, down after posting third-quarter earnings that missed analyst estimates. You can see getting really hit hard today, off about 12% there at $39.57 a share. NetApp on our radar this morning after the company posted earnings that missed analyst estimates. The stock tumbled yesterday. Today, shares trading down just about 0.5%, 0.6% or so. And we are also watching Groupon. The Coupon website is testing a credit card reader for merchants that could compete with similar devices by eBay's PayPal and Square companies. Groupon trading up 0.3%. Well, it's certainly been a big week for tech, from the aftermath of Facebook, of course. From that IPO to the earnings of HP and to Dell. Sheila Dhamarajan has been taking a look at some of the other tech stories that you need to know about. Sheila, why are there protesters outside of Amazon?
Right, a scene you don't see that often, right, Trish? I mean, this is at the company's annual shareholder meeting. Take a look at this. About 100 protesters gathering around, calling on the company to pay more taxes and to treat its workers better. You know, all of those efforts did pay off. CEO Jeff Bezos said Amazon would spend $50 million to retrofit certain warehouses. The big issue was air conditioning. Now, another interesting nugget to come out of the meeting, more on the business side, 9 out of the 10 top 10 selling items on Amazon are actually digital goods or platforms. So not the toiletries, not the things that you usually think of when you buy on Amazon. You know, this really underscores how big of a digital player Amazon is becoming. And also, it plays into the critics' hands that say Amazon really needs to figure out how to make money from all of this. Remember, hedge fund honcho David Einhorn, he was the latest to call out the stock. He said, look, this stock is a riddle to me. I don't understand basically how a company can take so much market share. Remember, they have about $50 billion in sales. I don't understand how they can take so much market share from the retail world and make no profits. Now, I want to stick with this theme of profits because that is something that Dell definitely struggled to impress shareholders with this week. Remember, they had that very disappointing earnings report, but it is not slowing down their M&A ambitions. Dell, in fact, is set to be in discussions to buy Quest software. This is according to people familiar with the matter. And one more for you. You know, you touched upon Groupon shares and what they're doing. Want to talk a little bit more about this credit card reader that they're actually trying to do with merchants. You know, electronic payments is such a hot field. You got players like PayPal, Square, even Google, all trying to get you and me to pay with our phones. Here's the thing, great for the consumer in terms of convenience, right? We don't have to worry about cash, we don't have to worry about credit cards, but it's also a huge win for the merchants. With all these players now in the field, everyone is competing to get the business. That means lower and lower fees for merchants, really a plus for small businesses, Trish.
All righty, we're going to leave it there. Sheila Dhamarajan, thank you so much. And just ahead for you, digging out of the debt crisis, we're going to be talking with the head of the G20 Summit on why international trade is the key to getting growth back on track. Plus, President Obama rallies the base in Iowa. Al Hunt, he's going to be here. He's got more on this battle for a key swing state. Alrighty, as the West Coast wakes up, we like to take a look at some of the tech stocks that are making some news right here, and one of them happens to be Verifone Systems this morning, down after posting third quarter earnings that missed analyst estimates. You can see getting really hit hard today, off about 12% there at $39.57 a share. NetApp on our radar this morning after the company posted earnings that missed analyst estimates. The stock tumbled yesterday. Today, shares trading down just about 0.5%, 0.6% or so. And we are also watching Groupon. The Coupon website is testing a credit card reader for merchants that could compete with similar devices by eBay's PayPal and Square companies. Groupon trading up 0.3%. Well, it's certainly been a big week for tech, from the aftermath of Facebook, of course. From that IPO to the earnings of HP and to Dell, Sheila Dhamarajan has been taking a look at some of the other tech stories that you need to know about. Sheila, why are there protesters outside of Amazon?
Right, a scene you don't see that often, right, Trish? I mean, this was at the company's annual shareholder meeting. Take a look at this, about 100 protesters gathering around, calling on the company to pay more taxes and to treat its workers better. You know, all of those efforts did pay off. CEO Jeff Bezos said Amazon would spend $50 million to retrofit certain warehouses. The big issue was air conditioning. Now, another interesting nugget to come out of the meeting, more on the business side, 9 out of the 10 top 10 selling items on Amazon are actually digital goods or platforms. So not the toiletries, not the things that you usually think of when you buy on Amazon. You know, this really underscores how big of a digital player Amazon is becoming. And also, it plays into the critics' hands that say Amazon really needs to figure out how to make money from all of this. Remember, hedge fund honcho David Einhorn, he was the latest to call out the stock. He said, look, this stock is a riddle to me. I don't understand basically how a company can take so much market share. Remember, they have about $50 billion in sales. I don't understand how they can take so much market share from the retail world and make no profits. Now, I want to stick with this theme of profits because that is something that Dell definitely struggled to impress shareholders with this week. Remember, they had that very disappointing earnings report, but it is not slowing down their M&A ambitions. Dell, in fact, is set to be in discussions to buy Quest software. This is according to people familiar with the matter. And one more for you. You know, you touched upon Groupon shares and what they're doing. Want to talk a little bit more about this credit card reader that they're actually trying to do with merchants. You know, electronic payments is such a hot field. You got players like PayPal, Square, even Google, all trying to get you and me to pay with our phones. Here's the thing, great for the consumer in terms of convenience, right? We don't have to worry about cash, we don't have to worry about credit cards, but it's also a huge win for the merchants. With all these players now in the field, everyone is competing to get the business. That means lower and lower fees for merchants, really a plus for small businesses, Trish.
All righty, we're going to leave it there. Sheila Dhamarajan, thank you so much. And just ahead for you, digging out of the debt crisis, we're going to be talking with the head of the G20 summit on why international trade is the key to getting growth back on track. Plus, President Obama rallies the base in Iowa. Al Hunt, he's going to be here. He's got more on this battle for a key swing state. My next guest has quite a bit to say here about how the global community should be dealing with continued uncertainty in Greece and the European crisis as a whole. You know, Latin America saw its own shares of problems. Certainly Mexico, Argentina went through some pretty severe debt problems back in the 80s, currency issues in the 90s. Alejandro Ramirez is chair of the B20 summit this year, and he brings a unique perspective, I think, Alejandro, because you've kind of seen a version of this movie before there in Latin America, having dealt with a liquidity crisis there and obviously some real concerns back in the 80s and 90s. Welcome to the show. Walk me through what happened in the 80s, and are there any lessons that can be applied to the debt crisis you dealt with back at home to what's happening now in Europe?
Yes, well, thank you for having me on your show, Trish. Definitely there are lessons to be learned from what happened in Latin America, both in the 80s and in the early 1990s. In the 80s, we had a debt crisis, and you know, most Latin American countries were over indebted, and we were able to renegotiate and restructure the Latin American debt. In 1994, again, Mexico had a crisis, but that was more a currency crisis, because Mexico had dollar-denominated government bonds that it could not, you know, pay in due time. So there was a liquidity issue that was solved with the help of the United States Treasury. But after 6 months, you know, we were able to repay and be back, you know, in form. So
it happened quickly.
It happened really quickly, and it was more liquidity rather than a solvency crisis, which is what we're seeing in Greece now. That is really not a matter of liquidity of a number of months, but it's actually a severe solvency crisis.
And wouldn't you say one of the issues too is that you know, in Europe, they don't have the ability to just individually, countries that is, start printing their own money. You had that ability.
Right. Yes, we have our own currency, our own monetary policy, and that helped us, you know, to be able to get out of the crisis faster.
You're also talking about smaller amounts of debt overall than what we're looking at right now.
Right. In 1994, 1995, the U.S. secured a $40 billion credit line, and that was, you know, enough to stabilize the market. So that was, you know, a major difference as well.
So Alejandro, what needs to happen in Greece? Is there anything that they can learn from what you guys went through, or a completely different situation with a different prescription?
No, I think that the first thing that Greece and to some extent other European countries need to learn is that nobody can live beyond its means. And for many years, you know, Greece, I think, was living way beyond its means, and it was just growing the national sovereign debt, and was, you know, making future generations of Greek citizens, you know, heavily indebted, and it was a time bomb, basically. And since the Eurozone came into existence, it was clear that the public deficits of European nations had to converge and had to be reduced, but some countries did not comply, like Greece, and now we're seeing the consequences. In Latin America, we established macroeconomic responsibility, macroeconomic balance, fiscal balance. So now in Mexico we have a budget deficit that is less than 1% of GDP.
Well, I would also say that, you know, Latin America learned all these lessons pretty hard and guards very carefully now against too much debt, and guards very carefully, you know, not all countries, because Argentina obviously has its issues right now, but you know, you look at Mexico, you look at Brazil, and they guard very carefully against inflation as well. That's obviously been a concern given what these countries went through. You say something very interesting. You say Greece can't live beyond its means, that in fact it was a time bomb getting ready to go off. Is there something that we should be taking away from the European crisis and applying here to the U.S. in terms of the lessons that might be learned? Because you look at our $16 trillion deficit, you look at our continued obligations and entitlement programs that really are not sustainable in their current form, and what that might do to future generations here in the U.S.
Yes, for sure. I think, even though nobody thinks today that the U.S. could default, there's a big risk that Greece will default. In the case of the U.S., I think the lesson to be learned is that, the debt has to start, decreasing. It cannot be increasing year by year, because at one point in time it will become unsustainable.
And we don't, do you fear that the U.S. could actually be another Europe,
no,
if in fact it's unsustainable, or is it just, we're still the only game in town?
Well, I think for the time being it's the only game in town, but I think the U.S. will eventually start reducing the public debt. I think this
it'll have to happen,
it has to happen, yes. So I hope will never happen
sooner rather than later. Okay, so let's talk a little bit about what kind of influence you see Europe having on your economies in Latin America. In your markets there. I mean, there's been a lot of concern that basically people are going to seek safety if, in fact, Greece leaves the Eurozone, which means that emerging markets are really going to be badly hurt, because they're going to take their money out as fast as they can and flee to things like U.S. Treasuries.
No, you're right. It's surprising to see that a country of 10 million people can have such an influence and an impact in the global economy. We're seeing that Latin American currencies depreciate when there's uncertainty about the possibility of Greece leaving the Eurozone. And so the U.S. dollar becomes the currency of refuge, and that hurts Latin American currencies, and also commodity prices. And many Latin American countries are primary commodity exporters. So we're being affected, and that's why in the B20 summit that is coming up next month in Los Cabos, we're issuing recommendations to the G20 leaders to restore growth by looking also at the structural reforms that need to take place, and by also promoting freer trade, because we think trade is one of the engines of global growth, and we need to keep pushing the freer trade agenda.
All right, we're going to leave it there. Thank you so much. Alejandro Ramirez, chair of the B20 Summit. Nice place to have it, by the way, Los Cabos.
Thank you.
All right, time now to get you caught up on some of the other top stories that are happening around the world, starting with the Syrian government. Forces shelled a number of neighborhoods in the city of Homs. There was no immediate word on casualties, and in the capital of Damascus, troops fired tear gas to disperse a large anti-government demonstration. Votes have been counted, and the early results from the presidential election in Egypt show the Muslim Brotherhood's candidate is set to win the first round. He could or would then enter a runoff on June 16th, where his likeliest opponent will be a former aide to Hosni Mubarak. This is according to early results. Ricotta cheese and olive oil are just two of the hundreds of flavors available at a giant gelato festival in Florence. At least 50,000 visitors are expected to crowd the event. All right, coming up next on In Business, when I return, President Obama blasts Mitt Romney at a rally in Iowa. We're going to have the very latest on the battle for this crucial swing state. And expect a lot of confusion in Greece. If, in fact, Greece leaves the euro, we're going to tell you what will happen on the ground in Europe. See you in 2 minutes. The tough economy is certainly posing a challenge for the president's re-election campaign, notably with white, struggling middle-class voters who seem to believe that Romney may look out a little more for their financial future than President Obama. I'm joined right now by our Washington editor, Al Hunt. Al, good to see you as always. Does this election come down, as many have in the past, to simply the economy?
Well, I think simply I might quarrel with, but the economy will certainly be the dominant issue, Trish. Who knows, there could be an event in September or October that changes that, but whatever type of voters we're talking about, women, struggling white middle-class voters, they really are Latinos. They're focused on the economy, and that will be the major issue. Go ahead.
Well, I mean, is it a situation where they just feel frustrated because they say to themselves, okay, it's been 4 years, they had a lot of high high hopes going in. We're looking at an economy with anemic growth. We haven't seen tremendous improvement on the job front. And at this point, anybody will do. That's
well,
not
if it's a
President
referendum,
Obama.
right, if it's a referendum issue, it'll be that. If it's a choice issue, then it becomes somewhat different. That's the great contest going on right now. One of the questions you alluded to earlier, this kind of white middle class, the struggling middle class, Obama never did very well with that group. Even in 2008, he lost non-college educated white voters by 20 points. He's going to lose them by at least that much this time.
Really? Okay. I know you've got a couple of big guests on Political Capital tonight. We're really looking forward to them. Chairman of the Senate Foreign Relations Committee, John Kerry, is going to be there. We also have Senator Marco Rubio, possible Romney running mate, incidentally. Senator Kerry, no fan of Mitt Romney. We know that there's been a lot of concern about Romney's foreign policy judgment in calling Russia the #1 foe of the U.S. And Kerry, I guess, has been one of the primary outspoken people on that.
Yeah, he has, Trish. Look, John Kerry is an important surrogate for Barack Obama in two ways. Number one, on foreign policy, chairman of the Foreign Relations Committee, has credentials on that. Two, he's from Massachusetts, and he will attack Romney on the Massachusetts record. So he went after him on our show tonight on both counts, saying he was breathtakingly naive on Russia and that his record was abysmal as governor of Massachusetts. So Kerry will be front and center for the next 5 months.
Let's talk a little bit about Marco Rubio. Right. Is he getting any closer to perhaps being the running mate on the Romney ticket?
I would still bet against that, Trish, but he will be an important surrogate for Mitt Romney, even if he's not a running mate. He's a very attractive young Latino. He went after, again on the show, he went after Barack Obama in a number of different ways. I thought he scored points in criticizing the Obama administration for cooperating with a group of Hollywood filmmakers who are doing a film about the capture of bin Laden, and said that really was untoward. I think a little bit weaker ground when he said that Obama was more divisive politically than Richard Nixon. That's a bit of a reach, but Rubio is an attractive young politician.
Why do you say you're betting against him, though, as the running mate on the ticket? Who do you think is more likely to get it?
Well, Trish, my track record is so bad, I want you to go to Vegas and immediately bet against whoever I'm going to pick. I think he's a little bit green. I think he hasn't had quite enough seasoning. If I had to bet, I'd bet Rob Portman, but I warn you, my track record.
All right. Well, all very interesting. We're very much looking forward to seeing the show tonight. You can catch Mr. Al Hunt, Senators Kerry and Rubio tonight, Political Capital, 9 p.m. Eastern. Do not miss it. All right, that is it for this hour of In Business. Coming up, what's going to happen if Greece announces a new currency? We're going to be talking with the senior economist at ING Group. He's going to be joining us from Brussels to discuss the potential outcome. That is coming up next.
From Bloomberg headquarters in New York City, this is In Business.
Hello, everyone. Welcome to the second hour of In Business. I am Trish Regan. We want to get a check here on the equity markets in the U.S. We're looking at an S&P, a Dow, and a NASDAQ that are all slightly lower, with the Dow off about 0.25%, their NASDAQ off 0.2%. S&P really straddling the flat line there. Some concerns right now about being long as investors head into a long holiday weekend, with the markets, of course, open in Europe on Monday, but not open here. We did get a much better read on the consumer there from the University of Michigan. The index is actually at its highest level since October 2007, mainly attributable, of course, to those lower gasoline prices, giving consumers a bit more confidence and a bit more spending power. All right, we want to get straight to our top stories, beginning with JPMorgan Chase. It's handed the oversight of risk to 3 directors with no risk experience. One is the head of the Museum of Natural History in New York and a former member of AIG's governance committee. Another is the CEO of Honeywell, and the third is president of Henry Crown. German Chancellor Angela Merkel has left the door open to a compromise on debt sharing in the euro area. Germany's opposition parties wrung a concession from the chancellor on her return to Berlin to reconsider a separate proposal on common liability for sovereign debt. And Elon Musk's spaceship, known as SpaceX, has made contact with the International Space Station. The space station's robotic arm has grabbed the SpaceX as it begins the docking process. If the docking is successful, astronauts at the space station would open the hatch and unload test cargo of more than 1,000 pounds of food, clothing, and lab equipment. All right, we want to get right back down to the floor of the NYSE. Josh Lipton there today checking all the movers this hour. Hey, Josh.
Hey, Trish. Yeah, as you said, what we're seeing here, U.S. stocks swinging between gains and losses this morning. That's his concern about Spain's regional governments, as you said, kind of tempering that optimism we saw from that consumer confidence report. But digging in to the SPX, the S&P 500, let's see what's working. Right now, it's your defensive sectors that are just edging higher. You can see telecom just in the green. There, it's really Sprint leading the charge with a 3%, now a 4% gain. Also, utilities advancing. Digging in there, you're going to see AES and Pepco have been rising this morning. Finally, investors like their consumer staples as well. In particular, check out Sara Lee. That's now up just over 2%. In contrast, Trish, the cyclicals, those economically sensitive sectors, they are your laggards. Materials in specifically bringing up the rear this morning.
All righty, Josh Lipton, thank you so much. Investors are continuing, obviously, to focus on Europe. That's the big story. What's next for the debt crisis there? In France, newly elected President Francois Hollande is having a honeymoon with investors. Sarah Eisen has more. The French really like him these days,
and usually,
judging by confidence numbers.
You see it in the voters having a confidence boost after the election, but this is really coming from the market. The bond market likes President Hollande, and if you look at what's happened since he was elected, first socialist president in 17 years to come to France, unseating Nicolas Sarkozy, you can see that French bonds are soaring and borrowing costs are absolutely tumbling. In fact, this morning, the 10-year reached a record low. This week, we saw the 5-year at a record. Now, part of it is this theme we've been talking about, investors pouring into safe bonds to hide out as concerns swirl over Greece leaving the euro. And France is considered number 2 to Germany when it comes to European safeties. But plenty are also pointing to Hollande, like the credit agency. Listen to what Moody's came out and said this week, that the new administration's strong commitment to the achievement of sustainable public finances is credit positive. Now, his policies include boosting social spending for families, education, government policies, all aimed at creating growth and jobs at the same time as fighting debt. So clearly investors are giving him the benefit of the doubt, rewarding him for his policies on France. But the question is, what can he do to really help save Europe at this critical point? Well, this week was his first summit of leaders. He came out of it and said some of my fellow leaders talk too much, but he is pushing 2 policies here. Importantly, Growth Pact and Eurobonds. We know Germany has been anti-Euro bonds, and Harvard's Neil Ferguson told us this morning that Hollande is playing a shrewd game, ganging up on Merkel with other countries like Italy. And we heard this out of Mario Monti yesterday on issues like the Euro bonds. But market participants are watching this French attitude very closely. Jim O'Neill, the chairman of Goldman Sachs International, telling me this week that he has sensed the change from places like Germany after the French election. It's very, very important because it could help speed up productive changes for Europe, like debt sharing or common euro bond, something that investors are really clamoring for.
So perhaps this sort of ganging up on Germany, this ganging up on Merkel might force Germany to come to the table and say, okay, well, we're willing to back these euro bonds.
And you heard it out of Prime Minister Mario Monti out of Italy yesterday in an interview saying what's good for Europe is a common euro bond, and eventually Germany will come around to such an idea. Also, President Hollande, when he came to the United States for the G8 meeting, was surrounded by other presidents like President Obama who talk a lot about growth. So for once, Merkel and Germany, with their austerity drive, looking a little lonesome.
All very interesting. Sarah Eisen, thank you very, very much. Well, the Obama Treasury Department is again declining to label China a currency manipulator, adding more fuel to a potent political issue this election year. Chief Washington correspondent Peter Cook has more on this. Hi, Peter.
Hi, Trish. Twice a year, as you know, the Treasury delivers a report on the currency practices of America's major trading partners. And the latest report released this morning finds that no country, including China, meets the technical test of a currency manipulator right now. Now, the report does not find that all is well in the world right at this moment. It concludes that the European debt crisis continues to pose a risk to the U.S. recovery and that greater exchange rate flexibility around the world would help global rebalancing. China was credited for allowing its currency to strengthen roughly 8% against the dollar since ending its peg in June of 2010. It's appreciated 17% over the last 5 years, not adjusting for inflation, and for committing to additional economic reforms at the recent strategic and economic dialogue with the U.S. and Beijing. Those are the good marks, according to Treasury. But the department says in the report more must be done by the Chinese. Quote, the available evidence suggests the RMB remains significantly undervalued. We believe further appreciation of the RMB against the dollar and other major currencies is warranted. Treasury promising to continue to focus on the currency issue. Lawmakers in both parties have criticized the administration in the past for not labeling China for its currency practices, for not labeling China manipulator, because they believe those practices are costing American jobs. And China already a big issue in the presidential race so far. This week, for example, Mitt Romney releasing a new TV ad describing day one of a Romney presidency.
President Romney stands up to China on trade and demands they play by the rules.
Now, Romney says he will label China a currency manipulator if elected president, impose tariffs wherever needed until they end unfair trade practices. Treasury Secretary Tim Geithner says such a move would pose a risk of a trade war. That's a sentiment also expressed in the past by top Republicans, including House Speaker John Boehner. So, Tricia, the politics here are complicated, but you can be sure that this report is going to add to the political debate in this election.
Yeah, no, it's a big concern. I mean, the last thing an economy needs is a trade war, as an economy like ours is trying to recover. Alrighty, thank you so much, Peter Cook. Coming up, expect a lot of confusion if Greece leaves the euro. We're going to give you the different scenarios, what could actually happen in the 48 hours following a currency change in Greece. And I'll have another. Is the talk of the horse racing world. But the Colts owner is battling regulators and prosecutors in several states. We're going to have a look at the owner of I'll Have Another. All right, well, I can guarantee you one thing. Expect a lot of confusion if Greece leaves the euro. My next guest has unique insight into what would actually happen on the ground in Europe if Greece has to introduce a new currency. Karsten Brezki is an economist who worked at the European Commission in the early days of the euro's creation. He is now with ING Belgium. Karsten, welcome to the program.
Hi.
Walk me through what would happen in the immediate aftermath of Greece leaving the euro.
I think the ECB holds the key here, obviously. So if the ECB decides to stop liquidity measures to Greece, to Greek banks, then it's probably over, which means we would have to see emergency meetings here in Brussels for over a weekend of 48 hours, and then Greece would have to prepare a new currency. They will probably have to introduce capital controls, border controls. At the same time, the other Eurozone countries would need to put a lot of money on the table to avoid contagion, to safeguard countries like Spain, like Italy. I think so we're really talking about huge bailouts to just avoid contagion.
Okay, walk me through what you mean by capital controls and border controls. When you say capital controls, are you saying that they're going to say, all right, you cannot take your euros out of the banks because we're in the process of changing those over to drachmas? Is that what capital controls are?
Exactly, that's it. I think you really need to think of that people would run to their banks, would take the cash out if they haven't already, and then they would try to cross the border to put their euro into other countries. And that's the whole thing. So Greece would try to avoid it.
Okay, so might this look similar to what we saw, say, in the Soviet Union? in the days, when they had a black market economy and, rubles really weren't welcomed. It was dollars that were welcomed in that black market economy. Might you start to see some version of that black market economy happening in Greece?
Exactly. That's what I think what we would see. Whether it's Russia, whether it's Latin America, of course, no one would voluntarily stamp his or her euro just to see them losing their value. So what we would see that actually the euro would become let's say the legal tender of a black economy, of the shadow economy, while a new drachma actually would hardly be traded.
How bad could this get? How much unrest could we see? Would you anticipate any violence as people got anxious because they couldn't get to their bank accounts to take their euros out? How long do you see this being enacted for as well? I mean, what is the length of the chaos that we might see? 24 hours, 48 hours, a week, a month?
I think let's say the immediate chaos would last a couple of days. Just look back, for example, in the 1930s, I think President Roosevelt, he had a 4-day bank holiday in the U.S. So I think that's something we should think of, 4 days, a couple of days, to at least get the first part of this changeover process going. Afterwards, of course, the chaos would not disappear. Why? Because the Greek economy would still be in a miserable situation. You would still have high unemployment. You would see inflation going through the roof, and you would also see that actually the government is unable to pay its bills. So the unrest and the economic chaos would continue even after the first phase of any changeover or introduction of a new currency.
You know, Carsten, there's two schools of thought. Some people actually think, some economists say, this is the best thing for Greece because they need to be out of the Eurozone. It's the best thing for the Eurozone because they need to be rid of Greece. But there are others like yourself who suggest that it would be utter chaos. My question to you is, would this chaos spread from Greece to Spain, to Italy, to Portugal, to the rest of Europe, or could you imagine a scenario where it's fairly contained, at least within Greece?
To be honest, I don't think that any orderly Greek exit is possible. So yes, it would spread. Of course, if you are a Spaniard and you see that all of a sudden Greece exits the Eurozone, you would think for yourself, hey, let's go to my bank and try to get my euro back at home. So you would immediately see a bank run in countries like Spain, Italy and Portugal. You would see actually bond yields going up further. You would probably see a high need for bank recapitalization, for new bailout packages. So this is really, I think, it's the mother of all financial crises.
You know, Carsten, we have seen that bank deposits in Greek banks have actually declined about 30% since this crisis began, but I'm surprised in some ways that they haven't declined more. Are people somewhat expectant that this will be resolved? Because I got to tell you, if I were living in Greece right now, one of the first things I'd be doing is figuring out a way to get my euros out just to be able to cover my bases and play it safe. But we're not actually seeing huge bank runs.
That's true. Maybe it's also explained by the fact that most Greek actually are against the bailout, but at the same time, most Greek are in favor of staying within the Eurozone. I think that's the whole thing. I think they still think that they could say no to the bailout, but at the same time stay within the Eurozone.
All right, we're going to have to leave it there. Carsten Bresky, thank you so much. We appreciate your time today. Economist with ING Belgium. All right, we want to give you a quick market check here. You can see markets reacting somewhat. If we can get the S&P, NASDAQ, and Dow Jones up there. A little bit of concern there on the Dow about heading into a long weekend in which the markets will be open in Europe on Monday, but not open here. But nonetheless, still off just about 18 points. S&P pretty much on the flat line. Same story there on the NASDAQ. We did get a positive read from the consumer today out of University of Michigan. That index actually having its best showing since October of 2007, if you can believe it, and that is primarily attributable to none other than lower gas prices. Lower prices at the pump mean people have more money in their pockets and more to spend. All right, just ahead on InBusiness, I'm going to have another take, or has taken another We're talking about I'll have another, right? There we go. He's taken the world by storm in the quest for a triple crown, but the man behind the cold finds himself battling regulators in several states. We'll tell you why. And Elon Musk's SpaceX making history. We're going to have the latest on its trip to the International Space Station. June 9th, I'll Have Another will be the talk in New York as the horse competes at the Belmont for the Triple Crown. The Colts owner, though, is duking it out in his battle against regulators and prosecutors in several states for his business dealings. Megan Hughes is in Washington, and she has more on the man behind the horse and the controversy.
Well, you know, Trish, starting out, racing horses is not a poor man's game, and the owner of I'll Have Another, that's Paul Redham, wanted in. So the 56-year-old former philosophy professor made his fortune with a subprime mortgage firm called Ditech Funding, which he sold to GM in 1999 for $240 million. And now he also owns another controversial business.
I auctioned off my clothes. I even tried to auction off my car. But when you need cash fast, make the cash call.
Just be sure you can afford the monthly
That's
payment.
California-based Cash Call. The late Gary Coleman was a spokesman, and it makes mortgage and short-term loans. It's been accused of using a front company to charge near 100% interest, also engaging in abusive debt collection practices, skirting state laws by going through other states' banks, even one from a Native American reservation. And Trish, all of this has added up. West Virginia officials went to trial on this in October. We're waiting on a verdict there. The company also settled in California. That was back in 2009 for a cool $1 million. And Maryland proposed banning the firm from offering mortgages because of a licensing violation. They also issued a $5.7 million fine in an earlier action. Now, Redham, for his part, he defended the business in a 2006 interview. He said, there is a tremendous need for people to borrow a few $1,000s to help them over whatever crisis they are having, and the banks are not serving that need, and they should. And the company, Trish, has continued to make money. It's likely to originate $9 billion in mortgages this year and bring in $180 million in unsecured loans. We're talking about loans up to $25,000, so smaller loans. One example on the company's website refers to an interest rate of 184%. Now, as for the investment in that horse, it's one of 34 thoroughbreds that Redham owns. He bought I'll Have Another for $35,000. The horse has won $2.7 million in purses so far, and we'll see if in 2 weeks that number grows. Trish?
Yeah, Megan, didn't the trainer just get suspended too? Seems like you got a lot of problems surrounding this horse.
Yeah, trainer Doug O'Neill was actually suspended for 45 days. The reason, one of his horses, not I'll Have Another, but a horse out in California, failed a test for having elevated levels of carbon dioxide. Now, O'Neill denies giving his horse any performance-enhancing concoction. In horse racing, this is called milkshaking. But important to point out, Trish, this does not keep him out of the Belmont because that suspension won't get started until after the race. So
milkshaking.
He will be competing for the triple crown. Yeah,
I learn something new every day. Thank you so much, Megan Hughes. Just ahead for you on In Business, choppy trading overseas. Today, we're going to go to London and get a wrap-up of all the overseas action. Plus, if Greece leaves the euro, what happens to the currency itself? We're going to find out. We're back in 2 minutes.
Live from Bloomberg headquarters in New York City, this is In Business.
Welcome back, everyone. I am Trish Regan. We want to get a look here at our top stories, beginning with Morgan Stanley, which has told its financial advisors that it will adjust prices on a few thousand trades in last week's IPO of Facebook. Some trade confirmations were delayed. Some orders may have been mishandled in Facebook's debut last week on the NASDAQ. And the SEC has wrapped up its investigation of Lehman Brothers. The commission found no evidence of fraud at Lehman in the month before its collapse in 2008. This is according to an internal memo. The SEC had been trying to determine if Lehman misrepresented its financial health before filing for bankruptcy. And Chesapeake Energy almost doubled its spending on the NBA's Oklahoma City Thunder during the past 4 years as the company bought everything from luxury boxes to naming rights for the home arena. Chesapeake CEO Aubrey McClendon owns a 19% stake in the Thunder. The company's directors are under pressure to investigate conflicts between McClendon's duties as CEO and his personal finances. Okay, we're 2 hours here into the start of trading. We want to get a quick look at stocks here in the U.S. You can see all morning the Dow's really been struggling just a touch there, more so than some of the other indices. But right now, off about 11 points, about 0.1%. S&P trading higher by maybe 0.2%. There, a gain of just 2.25 points at 1322. NASDAQ in the green just barely. Really, the market's touch and go as investors weigh what to do ahead of this long weekend as we head, of course, into this holiday weekend, a weekend in which our markets will be closed on Monday. However, Europe's will be open, and given all the concerns pouring out of Europe right now, a lot of traders questioning whether it's worth being very long this market. We did get a positive read on the consumer this morning out of the University of Michigan, that coming in the strongest since it has been since October of 2007. All right, we've got the European markets that are just settling their trades right now, just beginning to close. Let's see if we can show you those, with the FTSE trading slightly lower, the CAC 40 and the DAX positive. The DAX by 27 points, the CAC 40 by a little more than 11 points. The FTSE just barely closing down, just barely, pretty much ending a flat session. We want to get a little more context here on the European close. Angus Campbell with Capital Spreads joins us right now from London. Angus, why not more movement in today's market? There was certainly plenty of news for folks to chew on, whether that be Mario Monti's comments that were made on Italian TV yesterday, or this hope that we might see some more stimulus out of Europe, and yet you're looking at a relatively flat market there overseas.
Yeah, but don't forget what happened to the market in between the open and the close. We've actually had a very active session. We started with a decent rally. It looked like we could push higher before doing a 180, completely reversing those gains, falling quite dramatically into the red, and then we've done another 180. And looks like we might just squeeze again for today's session. And most importantly is really we've got to look at this week in context. Obviously, we've had a lot of losses for equities over the last few weeks. This week is just proving to be a little bit more positive. So whilst there's a bit of respite for investors, there's still serious concerns surrounding the Eurozone crisis and just what is going to happen in a few weeks' time when Greece goes back to the polls. And of course, continuing concern over Spain. One of the main issues today was, of course, the suspension of Bankia's shares, and the fact that the government is going to have to pump yet again even more money into what would really seem like a bit of a bottomless pit.
You know, Angus, let me ask you, do you think a Greek exit has been priced into these markets? And if not, at what level might that exit suggest, or what level does it suggest that the exit is priced in?
Yeah, I don't think we have seen the possibility. If it does happen, I don't think that's fully priced in yet. I think certainly we've had a very, very significant gauge of fear, concern, and the possibility, much increased possibility of an exit by Greece. But I think that come the 17th of June, when those elections are taken, that if the wrong party gets in from a bailout point of view and a Eurozone point of view, we could see serious increase in volatility and possibly even further moves to the downside. So I don't think it's been priced in yet.
Yeah, it looks like that, quote, wrong party, as you called it, is moving ahead in the polls. And yet at the same time, the majority of Greek citizens do not want to leave the Eurozone. Might that suggest that this really is coming down to simply a game of chicken? Because you might have that other party get in, which could scare the Germans and the rest of the European countries enough to say, all right, we're going to have to be a little bit easier on Greece.
Well, I think that, you know, really the Greek voter has to decide who's going to win this game of poker, because it's a bit more important than just a game of poker, of course. But you know, you've got people thinking that the Germans are trying to call the Greeks bluff, the Greeks trying to call the Germans bluff. Let's face it, the Germans will not wish to have to bail out Greece any further, and they have to accept the austerities. So my view is that Germany will remain very, very strong in their position, and if Greece votes in a party that is determined not to accept the austerity measures and bailout terms, then they will have to exit. And if that is the case, then we're in uncharted territory.
Yeah, no, then
but
if
ultimately,
that is the case,
I've got a feeling that, yeah, I mean, ultimately, I got a feeling that really the Greek voters will go, do I want to stay in the euro? We know the majority do, and they'll probably end up voting for the bailout party.
Okay, well, any way you look at it, get ready, folks. It is going to be a treacherous summer. We thank you for all your perspective today, Angus. In today's options update, we're taking a look at two different ends of the market cap spectrum for U.S. stocks, the large caps versus the small caps. Well, it turns out that some traders may be looking for safety from the European debt crisis, not in blue chips, but in their smaller siblings. Dominic Chu has more. Okay, fill us in.
All right, Trish. Well, it kind of defies some of that traditional wisdom when it comes to cap rotation. Typically, investors worried about bigger picture macro concerns would flock to the safety of those big cap, well-known names, less towards the smaller companies. But take a look at this. We looked at two different ETFs that track those different type caps, and what we looked at, what we found was interesting. The iShares Russell 2000 Index, ticker IWM, versus the Spider S&P 500 ETF, the SPY. We looked at 6-month options with exercise or strike prices that were 10% below current levels in this market this week here. A key measure of options prices, something called implied volatility, was what we keyed on here. For those small cap ETF put options, they reached some of the lowest relative levels compared to put options on the S&P. Now, in other words, the cost to protect against small cap losses is at really a low here compared to what happens here for the overall picture in the last 9 months. So far this year, we've seen relative outperformance from the large cap stocks. They've outperformed by around 2%, but some traders are perhaps betting that going forward, smaller cap companies may be able to better capitalize on an improving U.S. economy versus that of Europe. Now, according to Bloomberg data, about 8.5% of companies in the small cap Russell 2000 get at least 10% of their sales from Europe. Compare that with 13% of companies in the S&P 500 that get at least 10% of their sales from Europe. Now, Dave Lutz, who heads up ETF trading and strategy at Stifel Nicolaus, he says, quote, investors are lining up a great pair trade being long the companies with primarily U.S. exposure while being more cautious on companies exposed to Europe. They're building up protection against the larger conglomerates. Now, the caveat here, though, is if the U.S. economic picture starts to get a little bit murky here, they may hit small caps harder, says Stephen DeSanctis at Bank of America. So, Trish, we're watching those options on both the small cap and large cap ETFs. So keep an eye on those. That, Trish, is today's options update.
Dom Chu, thank you so much, as always. All right, just ahead for you on In Business, Elon Musk's SpaceX expected to dock at the International Space Station in just a few hours. We're going to have the very latest on this historic trip in just a moment. SpaceX's rocket is expected to dock at the International Space Station around 1 p.m. Eastern Time. Now, if the dock is successful, it's going to make history here, becoming the first non-government entity to accomplish this feat. Okay, for more, we want to head out to San Francisco, to our bureau there, where Corey Johnson, our West Coast editor-at-large, is standing by. He's been following this right from the beginning.
This is cool stuff, Trish. And, you know, we love the story of space from the 60s and the go where no man has gone before and all that stuff. But this is a real capitalism story. So what we saw today was really important because, yes, this was the first U.S.-based spacecraft to get to the International Space Station since the shuttle was retired. But maybe more importantly, this is a business. This is a venture of capitalism, an effort to try to prove that this privately held company and they do intend to take this thing public if this works. And so watch right now. So what you see right there is the actual Dragon spacecraft, which is a giant football filled with clothing and food, and basically is the most exciting laundry delivery of all time. But what's going on here is the International Space Station robotic arm, it's about 30 feet long, has reached out to grab onto the Dragon space capsule. It has done that, and it was met with much excitement at the NASA headquarters, as well as NASA Mission Control, as well as the SpaceX Mission Control in Hawthorne, California. And we've got some video there showing the people as the actual spacecraft was grabbed by the space station about an hour ago. And you can see the hugs, you can see the high fives. This is also the end of their shift down there at SpaceX. You can also see, look at the flat screen monitors. Look at the sort of sleek look of this. This isn't NASA. This is a privately held company there in Los Angeles area. And people pretty excited about finally getting this thing done. You know, I talked to Elon Musk, the CEO of this company, also the CEO of Tesla Motor Car, about the process and about how this was going to work. I sat down with him a few weeks ago down there in Hawthorne, California. And here's what he had to say.
So our Falcon 9 rocket takes our Dragon spacecraft to orbit, and then Dragon maneuvers over to the space station, docks with the space station, transfers cargo, and then picks up cargo for return to Earth, returns to Earth, and it's got to do all of that robotically. So that's pretty tricky, and it's got to interface, obviously, with a very defined thing, which is the space station.
But this is an important test.
It's notable in that it's the first time that we're trying to go to the space station. But I should emphasize that there's a good chance that we don't successfully dock with the space station. I think our odds of success are probably around 60 to 70%.
Beats Vegas.
I suppose it does beat Vegas.
And he beat Vegas. He did it. So maybe backpedaling expectations there, but looks like they're going to pull this off. And no, Trish, that was not an espresso machine behind him there.
You know, we don't have a ton of time. I got to run. But let me just ask you, what's the business model for this thing? Because you mentioned at some point the hope is that it would go public. Is it the government then that will be the biggest customer?
No, he says the government will be about 10%, like governments, 10% of just about every kind of business. As it's 10% of the U.S. economy, it'll be 10% of their business. But they've already got $4 billion in orders lined up for this thing. Amazing. If they can prove this works, from telcos and other companies like that.
It's exciting. Exciting to see private enterprise going where government has not gone before.
Why not?
Kind of play on words there. All right. Thank you so much. Corey Johnson. Coming up, coin collectors. Listen up. We're going to be talking to the curator of the American Numismatic Society to find out what a Greek exit from the euro is going to mean for coin collectors. Okay, everyone, each Eurozone produces its own euro coins. I should say each country within the Eurozone produces its own coins, with one common to all members, but the other carries a design that's specific to each country. So in other words, you've got each country over there all producing euro coins. Each country has a specific design on each coin that is specific to that country. Joining me right now to talk about what might happen if, in fact, we see Greece leave the Eurozone, the curator at the American Numismatic Society. A pleasure to have you on here, Gilles Brandesburg.
Gilles.
Gilles. Forgive me, my French is not what it should be. Okay, Gilles, so tell us, what might happen to some of these currencies that are in circulation right now if, in fact, Greece leaves?
Well, you need to take into account that there are certainly several scenarios. The fact Greece would leave the Eurozone and this is it may not be the most likely scenario, because you need to take into account that Greek people hold a lot of euro cash, and this cash is a claim on the European Central Bank system. So it may create some form of additional demand or pressure on the other European countries. So what may well happen, if you look at the precedent of the Soviet Union monetary collapse between 1991 and 1993, is actually that the strongest countries would leave first and not the weakest country. So another alternative scenario is that Germany or Finland decide to break. So it may not be the only possible scenario to see Greece.
Well, talk to me about this from just a collector's perspective. I mean, might you have some coins that are quite rare?
Well, I mean, it depends on how things happen. I mean, right now, there are no really rare coins being part of the European coinage system. For that, you need to understand what makes a coin valuable. It's a mixture of supply, demand, grade, metal, and quality. If I may take a couple of examples, some of the most expensive coins right now are US coins. Why US coins? And actually quite old US coins, like 1913 nickel or this 1933 gold eagle. Why? Because something very unusual happened. Some coins were minted without a full approval of the mint, and they became very, very, very rare collectible objects. So you need very short series for something like this to happen.
Okay, so what might a euro coin that had been printed in Greece and had the specific characterization of whatever Greece puts on their coins, what might that be worth?
Again,
if they leave?
It depends how they leave. Is there going to be like a transitional currency? Will coins and banknotes be withdrawn, forcibly withdrawn? Will they lose legal tender, which is difficult to implement? If you look at the way Argentina left the peg to the dollar, it was easier to control the peso because the peso was only legal tender in Argentina. It's not the case of the euro. So as long as these coins and banknotes exist in large series, they are pretty much worthless, or not much more than their face value.
Worthless. All right, well, that just about sums it up. We thank you so much for being here today. Good to see you, Gilles, from the American Numismatic Society. All right, keep it right here. InBusiness is going to be back, and we're going to head to the NYSE. We're going to get the latest reaction to today's trading. Josh Lipton joining us from the NYSE. We'll see you on the other side of this break. Coming up on Surveillance Midday, Citi's chief U.S. equity strategist Tobias Lefkovich will be joining Mr. Tom Keene. They're going to be discussing strength in equities and investments. That is next for you, so don't miss it. In the meantime, we want to get one final check here on the markets. Let's head down to the NYSE. Josh Lipton there. Josh, we're not seeing a ton of conviction. How come?
Well, listen, Trish, we spoke to traders this morning. They were telling us they weren't looking for a lot of action on the floor today, pointing out a lot of traders and investors, they've already picked up their bags and headed to the beach. But I want to point out a few names that are moving today worth highlighting for you. Let's start off with Verifone and the tough day that company is having. Verifone, the largest maker of credit card terminals, forecast third quarter revenue that missed what the street was looking for. That disappointed investors. You can see the reaction. Verifone stock down double digits. On the other side, though, Trish, a stock in the green today is Chesapeake Energy. Now, billionaire investor Carl Icahn, we know he likes to push for change at the companies he invests in. He has become one of Chesapeake's largest shareholders. That's what sources are telling Bloomberg News. Icahn's stake may amount to more than 4%, making him at least the 5th largest investor in this natural gas producer. Also worth mentioning, Trish, is Facebook. Enjoyed a 2-day advance, but that's over. The social network back in the red right now, down about 3%, down about 13%, Trish, from its IPO price of $38.
All right, very interesting stuff. Of course, we did get that rather good read on the consumer this morning. Looks like that's not having a huge effect on investors. Nonetheless, people feeling a little bit better about things, in part because of those lower gasoline prices. Best read on the consumer since October of 2007. All right, we're going to have to leave it there. That is it for this edition of In Business. Coming up on Street Smart today, I'm going to see you there at 3 p.m. We've got a terrific interview planned for you. Adam's going to be speaking with the chairman of the Athens Stock Exchange, so you don't want to miss that. He'll be asking him, of course, about what he anticipates for the outcome for Greece. We should be expecting some very, very interesting answers. I'm going to see you there at 3 p.m. Thank you so much for watching here today. Keep it here on Bloomberg. We've got Surveillance Midday. Tom Keene, Tobias Lefkovich coming up next.